Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. We're going to get together next Monday for our next option session, but just due to the way March, the calendar plays out, there's kind of like this third, um, this extra week where we don't get a chance to like go over state of the market and figure this video, good opportunity to maybe just talk quickly about spiders, about option pricing, just because still a lot going on, lots taking place since we last got together, and just to kind of give you like a little bit of like a heads up prior to us meeting next Monday. Okay, and what I call the state of the market is basically twofold. So it's spider like technical, right? Technical mixed with fundamental, but also option pricing, because it's I really think like both of those areas are important, right? It's nice to have a little bit of an idea of what the technicals, the fundamentals are saying, and what the options are saying too, right? And right now, we are basically one week removed, almost exactly, from our low. So last Monday low, we aren't at the high from this bounce, but we're pretty close to the high from this bounce. So Thursday, actually, I'll just do it in a bit. So Thursday had a nice move up into like the low 260s, and we haven't quite gotten back there, but we also haven't really rolled over that bad, right? So at the moment, we are back above the 8 EMA, which is a really key momentum trend indicator, right? So you can see when we lost it, we broke down, we struggled to get back through it, right? And that provided decent shortable bounce opportunities on the couple of times that we actually got close and or hit it. Now we're through the 8, and now we're coming into the 20-day, which is this pink line here. So the 20 simple. That's going to be another really key area of interest. We're pretty close to it. It's sitting at like 260, 262.79. What you'll want to watch is if we do get through it, then we have a really obvious gap to 269.32, which is from March 13th. All right, and then you can see that there's multiple gaps on the way higher. If we do want to keep moving, I mean, there's plenty of gaps to target. So got a gap here, got a gap here, another gap, and so on. Right, so you can see that we're not lacking for unfilled gaps on the way higher, but this 20-day, odds are the first time we hit it, it's probably going to be resistance unless there's some major headline to drive us through. All right, so this is what you want to focus on, and then if we get through it, then you're looking at 269.32 to fill that gap. Now, if we lose the 8 EMA, then it doesn't mean we're necessarily going to fall apart right away, but then that starts to probably set up things more on the downside. Momentum might start to build more on the downside. You might see some of these patterns where we've seen a handful, well, actually not a handful, but we've seen a lot of stocks bounce off their lows and kind of like start to stall out. And now if we start to roll over and we lose the 8 EMA, then it wouldn't surprise me to see those stocks start to creep lower as well, right? Kind of mirroring what the S&P is doing, what the Qs are doing, all right? So right now we're kind of sandwiched in between. I don't want to say no man's land, but we are kind of just waiting for like the next cue, right? Are we going to get the next leg up, or are we going to start rolling over and building for the possible like next leg down? So what you'll notice too is that kind of like the intraday volatility is drying up a little bit. I mean, we're still moving up. I mean, relatively large amount, not relatively large compared to what we were doing earlier in March, but I mean, compared to what we were doing 2 months ago, we are still moving quite a bit. But from an intraday point of view, you can see that the swings are maybe not as dramatic. We're not seeing like the roller coaster, up 10 point spiders to like down 10 points later in the day, or down 15, 20 points. And like those types of moves really aren't playing out, at least not right now. So the overall intraday ranges, overall volatility for SPY is ticking lower. What is interesting about that is that the VIX still remains elevated, right? So the VIX is still, well, it's not in the 60s, but it's awfully close to the 60s, all right? And that means that option pricing, all right, so you can see that the VIX is still very, very, very elevated. So option pricing is still high, but the intraday moves are starting to get smaller. So it's a tough dynamic, right? So if you're laying out premium right now, the prices are high, but the overall ranges and the overall volatility is starting to decrease, right? And we might actually get to the point where we start to consolidate, in which case the VIX remaining elevated means option pricing is also going to remain elevated, and it's a tough area to look at near-term options. You got to be careful laying out the money, expecting the 15, 20 point moves, what we saw in March, when if we're going to start to enter in a phase of consolidation, or maybe if it's just even like a pause, got to be really, really careful right now, okay? And I still think I still think the time frames that maybe you want to focus on are, I mean, either like day trading, so very short term, where you're not taking necessarily like the overnight risk. It's like kind of in after the open, out before the close, right? Because that way, like you can manage like that theta and that premium burn a little bit better, or also still like longer term, 2 months, 3 months, 4 months option time frame. Okay, and calendar spreads, calendar call spreads have been kind of popular. It's still an interesting idea because option pricing for the near term is still pretty elevated. So it's still an interesting idea if you're looking for different types of strategies to maybe kind of like minimize that near term risk or lessen that near term risk. So that's definitely something you want to keep an eye on. All right. Qs, well, I won't go over it, but Qs slightly different, more or less the same. You can see that they're showing a little bit more relative strength. They're trying to get through the 20-day. They've actually hit it the last 3 days in a row, or last 3 sessions in a row, excuse me. So you can see that Qs, tech, showing a little bit of relative strength, which makes sense. I mean, you can see that some of the tech names have hung in a little bit better. But for the most part, spiders, Qs, kind of like a similar setup, thinking the same thing. Again, with the options on the Qs, like things are the VIX is still elevated, meaning that option pricing is still going to be elevated, but the overall ranges are starting to decrease. So you got to be careful, and you got to be really mindful of your time frames and what type of premium you're laying out. All right. So if you like these videos and you're looking for more information on options education or more information on options trading, please follow up with the link in the description of the video for more information on options to play. Stay safe, stay healthy. We're all going to get through this together. Have a great night, and I will talk to you all tomorrow.